Hey, Bobby, we should
There
have
we
you
go.
now.
Sorry, I was trying to do it on laptop.
No worries. It's one of the weird realities at the moment with Twitter's is it's actually surprisingly popular and gets used quite a lot, but the reality is that it's really not very feature rich.
It's glitchy, yeah. Yes.
Yeah. You might just need to mute if you've got anything in the background.
Yeah,
Bobby.
I'm literally about to do that. 2 wee seconds.
Okay, great. Okay, in which case we can get started. So the first thing that we'll do, guys, is Tobe and Bobby. Do you want to just introduce yourselves? Perhaps Tobe, if you go first, and then Bobby, and just explain who you are with the Kanpeki.
No problem.
Yeah, happy to do so. So I'm Tobe. I'm sort of been in and around and working closely with Coiner. Coiner is our lead developer here at Kanpeki. Been working with him pretty much from the outset of sort of idea generation. I'd say a significant amount of that came from him, but the shaping and forming of it we sort of did together as a group. Being the size we are, there aren't any clear-cut, roles, so to speak. Whatever pops up and whoever is on deck to get that done is usually how it transpires. So I'd say I'm part of operations, a little bit of BD, a bit of marketing, I suppose. But the general sort of state of play is everybody's on deck to do whatever needs to happen, which I think is normal for a community based project.
Sure, quite lean, quite mean. Bobby, do you want to just fill us in with you as well?
Yeah, hi, I'm Bobby. So basically, we were just a group of friends. A lot of us joined crypto around about the same time. We all kind of met each other through, specific projects in the past, where we were all investors. I say investors, but we all bought a token. Became friends. We kind of started talking about crypto and just everyday things in general, and we created our own little channel separate from everything else, where we just discussed everything in general. And from there, it just kind of spurred from just a group of friends talking to, one of the group discussing an idea for a project, and at first it was all talk and, just how it could work. And as anything kind of just evolves, and then it just became a thing, it's funny because we were discussing things about random things for a long time, and then all of a sudden we went from a group of friends to a small team of a project. So that's really it. It's a community based project. We've all started. We all done our own little thing, and then we just kind of all gave ourselves a role to help out where we could. That is pretty much it.
Okay, so I think the thing that we'll do is just jump in and try and just simplify and explain what it is Kanpeki is intended to do, because Kanpeki is not a money market. I think I've got that right. So we need to get into that a little bit later on. But for now, what would be useful is if we simply take kind of an explanation of Kanpeki, and then I ask you to kind of elucidate on that a little bit more. So Kanpeki, in your docs, is explained as being an incentivized, non-custodial, individualized, fixed rate borrowing and lending platform. So that's quite a lot. So should we run through those pieces, and can you explain to us what that means in practice?
Yeah, absolutely. So, key items here are incentives, non-custodial, the individualized and fixed rate.
Okay.
Component of a lending platform. They're all relatively familiar concepts, I'd say, if you've been around these parts a fair bit. Incentives are, well, they're tricky to say the least within crypto. Presently, they're one of the main reasons I guess everything, keeps working. And I say that positively and to a certain degree also negatively because, we can't become too dependent on incentives or rewards.
We
But
talk
I think
emissions as well.
yeah, precisely. Talking emissions, and there's been chatter around emissions, and is it a good thing, and how sustainable is it, and 10 years from now, what'll happen to either the amount of tokens that could be emitted and or the value of them, and where would that leave DeFi, and that's been a central piece, if you like, in driving how we came up with our solution. And incentives in and of themselves aren't bad. They're used everywhere in various industries. But to the extent you can apply them in an efficient and a sustainable way, I think they're, it's fair game, and they have a role to play. Mm-hmm. And I think that's what we've done here with Kanpeki, such that, unlike other platforms, in DeFi, both in Fantom and other blockchains, the incentives are very much focused on the borrowing side of the equation as far as the lending process is concerned.
Okay.
And we're not exclusive in doing that. There are a few others that provide rewards, but those rewards are generally DAO type tokens that sort of give you access to voting rights. Should you need them, or should you have enough to be able to utilize them?
Right.
With us, the rewards are really meant to drive borrowing. They're really meant to subsidize borrowing, and as a result, cause people to borrow more, or at least make it cheaper for them to borrow more often. So that means that we're fully expecting that people will, one, claim these rewards, two, potentially sell these rewards, and that we have things in place to ensure that when they do so, not if, but when they do so, it doesn't have sort of really negative impacts on the value of the token or the operations of the platform.
Okay.
So incentives for us is critical. We're applying it on the right side of the equation to the borrowers, who we believe are the centerpiece and the most important stakeholder in lending. And I think the way we're doing it, and we'll continue to discuss this as we progress, you'll find that it's going to be something we can sustain for a very long time.
Okay.
Non-custodial is pretty general concept. We're not a centralized exchange. We're not a centralized platform. There is no company. There is no no organization that collects data on anyone. Everyone connects their wallets and interacts with these smart contracts on chain. Your key is your wallet, right? So at the end of the day, we're not going to be a party that's going to be in position to connect, whether it's KYC or like that. Those types of concepts don't exist with us. Kanpeki is just a set of contracts on the blockchain, and anyone can interact with them.
Okay.
And then as far as individualized is concerned, I think this one needs probably the most legwork as far as explanation is concerned, to give people this sort of full or complete understanding of our lending platform. So every asset on the Kanpeki platform is one that we require it to have a Chainlink feed. Right. So if that asset doesn't have a Chainlink feed, chances are it won't be on Kanpeki.
An oracle.
Yeah, that's correct. So something that independently verifies its value, separate from whatever the platform is doing. And this is a critical piece. Again, we'll speak to this a bit more later. But what I was trying to use that Chainlink concept to explain is, in doing so, we've basically set up for each and every one of these assets 3 different pools, right? We've set up a pool on the depositor side, which is where the depositors put in their cash. You can call them lenders if you like. There's a second pool, which is an interest pool, and there's a third pool, which is a collateral pool. And each of these pools are separate from each other. There's three different pools. When the lender or the depositor wants to lend some money, They deposit into that depositor pool. The borrower is borrowing from that depositor pool. So they're not borrowing from a specific lender. They're borrowing from the pool of value, let's call it FTM, that has been deposited in that FTM pool. Okay. Yeah. Now, they can provide collateral, which goes into the collateral pool. So that's separated from the depositor pool. That's pool number 2. And when they repay their borrowings, their collateral gets released back to them, and the principal gets redeposited in the depositor pool, and a portion of that, which would be the interest that's owed, then flows to the interest pool. Now, it's important to emphasize that we've separated these concepts, these values, these cash amounts, so to speak, into separate pools for risk purposes. But to highlight what I mean by individualized, your interaction with the depositor pool, for instance, as a borrower, is entirely sort of closed circuit. It's just your interaction. It has no impact on any other person's interaction with that pool, and no other person's interaction with that pool has an impact on your interaction with that pool. And this is critical. It's critical because we've done away with the need for algorithms, right, to track how much borrowing is happening and as a result shift rates up or down, right?
More simple traditional money market.
Correct. And that individualized nature means that you're essentially able to limit the amount of additional risk that you're exposed to, right? All of a sudden, Bitcoin goes completely crazy. The whole market turns green. Everyone starts to buy. You borrowed at 2%. And all of a sudden, you now owe a whole bunch more because the algorithms have changed, right? That the market's flipped. And it can go both directions, by the way. That won't happen to you on Kanpeki. Why? Again, you're interacting with the depositor pool. You've set to interact with that pool to borrow at 2 or at 3 or at 4%. And it stays 2, 3, or 4% for however long it is, 15 days, 20 days, 25, 30 days. And that's just one of the ways in which we've tried to minimize risk by, sort of making sure that these interactions, that each person that's interacting with this lending platform is doing so, again, in an individualized way. It's almost one step graduated from a P2P lending platform, which we were, and we can talk about shortly when we talk about yield. The P2P lending platform is also individualized, right? One person to one person. But here we've taken it one step further, still keeping the individualized nature, but making it more efficient such that many different people can interact with the pool that they're borrowing from while retaining that individualized characteristic.
And that last piece is the fixed rate part, which is also quite important, I think, to differentiate you from your competition.
It is. And, there's a few ways we can just go about talking, speaking to why fixed rate is critical. Fixed rate is critical in general in finance. It's just, it's a cornerstone in as far as financial services are concerned. I think that's important. And I think it'll eventually play a similar role in crypto. That's an opinion. 2, I think we've gone about creating a fixed rate lending platform because it's needed. So it reduces risks, especially on the borrower side. And it guarantees returns on the lender side. So another reason why we've chosen that. And 3, when we decided not to fork an existing project and build something from scratch, these are some of the freedoms you get to enjoy. You get to enjoy, well, do I really want to build a variable rate lending platform? And why would I? There seems to be 200 of those already in existence. Why don't we do something different? Not because it's different, but because it's needed. And we did that research and found that it was needed. So, fixed rate lending is becoming more popular in crypto. We believe it is better for sustaining returns for lenders. We think it's better for reducing risks for borrowers. And once you've built a platform like this and you start sticking your nose a little deeper into how these work and where it fits in the system in DeFi, you start to realize that counterparty risk is so important. And that concept is just easier to manage in a fixed rate lending sort of ecosystem compared to a variable rate lending one.
Okay. So I think we've been through there: incentivized, non-custodial, individualized, fixed rate. And now, hopefully, for those listening, either now or in the future, as a lot of people tune in to listen afterwards on their own time frame, if I say the sentence one more time, it should make a bit more sense. So Kanpeki is an incentivized, non-custodial, individualized, fixed rate borrowing and lending platform. Now, there's a range of different directions we could go here. Bobby, do you want to jump in?
I was just going to say that's a mouthful.
It is a mouthful. But that's why it's so useful for us to sort of say it and then to take those individual bits like we've just done there with Tobe and to sort of split constituents. I do think if we go... I think where I'd like to go next is actually, Tobe, you mentioned yield. Now, yield was the previous iteration of Kanpeki, right, which then evolved into Kanpeki. Want to talk a little bit more about that?
Yes, absolutely. It was a natural place for us to start. We launched our token at the time called the yield token. It was Bobby, correct me if I'm wrong, I believe December 2020. And at the time, everyone just had to be a member of the Telegram group and you got airdropped some tokens. There wasn't an ICO, any of those types of things. But when we were thinking through what a fixed rate lending platform should look like, there's a lot of assumptions you can make in crypto. Oh, we think, it should work this way. And as a result, we're going to build it that way. And some of those assumptions could be wrong because at the end of the day, it's hard to predict what the regular Dagans, if you want to call them that, will do. So we thought it would be a good idea to build something to check to see whether there was, people always describe product market fit, and then to just understand risk parameters a bit better. So Yield Credit came out. It was a P2P lending platform. In previous interviews, you've heard me compare it to Ethlend, which was the predecessor to Aave, and what they were searching for, when they took a close hard look at Ethlend and decided to take the best bits out of it to make Aave. What they were searching for, that product market fit, is exactly what we were searching for as well. We found it. We did a reasonable amount of loan volume in what was, I would say, maybe 6 weeks. The time got cut short because DeFi basically went on an insane run at that point in time last year around this time. And, fees on Ethereum were just unbelievable. So it became something that very quickly wasn't, usable. As much as we wanted to, but we got what we wanted out of it, and we had our lessons and we took away the goods and left the things that we think wasn't helpful for the space. So that's what Yield is, and it's an MVP. It's helped us quite a bit, and it's given us stepping stones to where we are today.
Okay, and I think from there, what might make sense to talk about is, let's take Kanpeki, which we've kind of, again, taken the constituent parts and laid them out a little bit, and let's see if we can visualize it from the perspective of a user. So if I were to take a prospective borrower, and that borrower was to come to Kanpeki, what would their experience be like on Kanpeki as a borrower?
So, as a borrower, one of the first things you're going to notice is that your journey to obtaining, whatever it is, USDC or USDT, those are often the most borrowed assets. Your journey to getting that 1,000 or 2,000 USDC in your wallet is very, very different to how many other platforms work, right? So what you are not doing is supplying a token, let's say FTM, to a platform, getting some platform token in sort of in lieu of that, and being able to utilize that platform token as collateral and or hold it for interest. Like that's basically how 90% of all the other platforms work, right? You're not doing that with us. Like, borrowing is a distinct and separate action. And if you are borrowing, you're not doing anything other than borrowing. So that will entail connecting your wallet. It will entail collateralizing FTM, for example. It will entail, and the platform will prompt you as you do this. It'll entail potentially staking the KAE token to access some very, very interesting and lucrative features on the borrowing side, which we can talk through as we go.
Yeah.
And then it'll entail getting access to those funds. The other thing that is quite distinct and different in comparison to, I'd say, 90% of all the other lending platforms out there, because most of them are forks of each other, and so they work in a similar way, is, this. I don't want to say that we were thinking about risks when we created this limitation in duration of a loan. It was certainly one of the things we were thinking about, but the other critical piece to why loans don't generally extend beyond 30 days on our platform, is because returns are fixed, right? Like, we need those loans to end so that we can collect on the interest and obviously provide those returns to those that have deposited on the deposit side, on the lending side, right? So while sort of cutting that timeline down into a 30-day fixed period of duration, which you can extend if you stake to another 15 days, but let's just keep it simple, right? You could take out a loan, that loan's good for 30 days, and in 30 days you're paying it back. It could also be 25 or 20 or 15, but most people go for 30 days. Repaying that in 30 days is something that you generally might see on other platforms, but are not required to do on other platforms. And that's a critical distinction. So in general, loans are, in DeFi, and this is everywhere, at all blockchains, generally outstanding from between 17 to 22 days on average. But you do find some people hold on to loans for much longer than 30 days, much longer than 2 months in certain periods. So we took that information and we said, okay, if this is what majority of the market's doing, we don't think loans need to be outstanding for more than 30 days, which, by the way, is a good fact, because we need to collect on this interest to pay the depositors. And to top that off, from a risk perspective, every time you hold on to a debt, the longer you hold on to it, the more risk you're accepting, and the more counterparty risk anyone that's depositing or on a depositor side also needs to accept. So I think getting to that sort of end goal where we have a fixed term, a fixed duration, in addition to our fixed rate, is another characteristic that's on the borrowing side of the platform that that the borrower won't have necessarily experienced anywhere else before.
That's unique.
Yeah.
And then if we take from the perspective of a depositor, so I arrive at the platform, what assets can I deposit at the moment on Kanpeki?
Let's see. There is USDC, USDT. There is FTM. Yeah, of course. Wrapped Ether. And one moment, I am going to launch our app.
Link.
And Link. Thank you.
Okay.
That was the last one.
Yeah. So Fantom, USDC, WETH, DAI, USDT, and Link.
Yeah.
Okay. And so the reason for those asset classes, coming back to what we discussed earlier, presumably is because they all have reliable oracles you can use.
Yeah, they all have a chain link feed. Which is one of the main things, that we require to have you listed on the platform.
Okay.
Yeah.
Bobby, could you get a little bit closer to your microphone?
Sorry. Hold on. Any better?
Yeah. So
Yeah.
you're just saying that they all have chain link feeds, which is a requirement for adding an.
Yeah, without a
Yeah.
chain link feed, we can't put you on the platform because we need that Oracle to give us, reliable, up to date information on your price.
Yeah. And then the other question I would ask there, then, before I continue down this kind of hypothetical depositor scenario, would be, are you expecting to list more assets, or for now, for the sort of foreseeable future, you're going to stick with just these 6?
I think we're open to listing other assets. The requirements for listing aren't arbitrary. It's not based on being part of a inner circle or club. It's all security driven, and having that third party price verification is critical. And once you have it, I think conversations can be had, and we could move towards a listing for sure. So I want to say there will be more, but if you're familiar with how Chainlink operates, it's not that straightforward to get a feed. So, as they pop up on the Fantom blockchain, we will certainly be chatting with the respective to see what if they want what works well for them.
Sure. Anyway, moving forward, I arrive at Kanpeki and I decide as a depositor I want to supply some USDC. Okay, I've got some USDC I want to supply. What will my experience be like from there? I have the USDC in my wallet. I've connected to the Kanpeki app. What do I do next? What happens next?
It depends on whether you want to be a depositor or a borrower.
If
So,
I
we're talking about depositors right now, yeah?
I want to be a depositor, yes.
Okay, so it is fairly straightforward. It's you pick the amount that you want to use. So, say for example, 10,000 USDC, for example. You go onto the platform, you connect your wallet, you go into the depositor side of the platform, pick the amount you want to lend out, and you add it to the pool. It's fairly straightforward.
Mm-hmm.
You add it to the pool, you pick your interest level. You've got between 2 and 10%. You have the option to stake the K token, KAE, which basically offers you more than 3% interest on your deposit.
Mm-hmm.
So, say for example, you're just a depositor, you're coming in, no stake tokens, you can choose 2 or 3% interest. You pick your interest rate, you add to the pool, and basically wait.
And when you choose that interest rate, Bobby, so for example, the 2 and the 3% that you've just quoted there, why are they different? Why, for example, would I choose 2 over 3 or 3 over 2? What difference does that make to me? Is that why, if I choose 3%, why is it 3% and not 2%? What's the difference?
It's purely yourself. There is no reason. It's a funny one because everyone knows the way everything's worked before. It's the lower interest levels, you get a better chance of getting that taken out. A borrower to come to take a lower interest loan, and a 2% loan seems more appealing than a 10% loan or a 3% loan.
Sure.
With Kanpeki, it's not the case. If you look into Kanpeki hard enough, we've actually got a site as well where you can check. There's a point where the higher the interest rate, the borrower walks away profitable. So it's not just a negative interest. You can actually walk away with more money than you borrowed.
And that's because of the KAE tokens.
Exactly, the reward. You get rewarded for paying your loan back on time, and your reward obviously depending on the price point and a few other things as well. Your interest level, it basically allows you to either walk away with negative interest or profitable. Not in every single case, but what we found, the higher the interest level, the more chance you have of walking away with the bare minimum spend. It's balanced. We've created something where it's more balanced, so that it's not just the lender that is becoming the profitable party. It's both sides.
Mm-hmm.
So, Chadley, on if you don't mind me jumping in, Bobby.
No, carry on.
You know, on the depositor side, you know, the difference between picking 2% and why it stays 2% or 3% or why it stays 3% is the fact that you are being afforded the ability to claim that much, 2% or 3% of the amount you deposited from the interest pool. And the right to claim up to that amount is something that cannot be taken away from you, right? It cannot be taken away from you by someone that deposits $1 billion the day after you. You know, nor can it be taken away from you by someone or sort of inflated because someone leaves the pool, right? You will always and only have the ability to claim the interest which you yourself picked. So this is what makes that interest component fixed. You know, it's determinable, and it's something you can come to rely on. Now, just because it's fixed doesn't necessarily mean that you're going to have the chance to claim that much, right? At scale, everyone's looking at that interest pool, right? You remember that I described the 3 different pools that each asset has on Kanpeki. So taking Fantom, for instance, there's the depositor pool, there's the collateral pool, right? The Fantom depositor pool, the Fantom collateral pool, and the Fantom interest pool, right? So as interest gets repaid, or as principal gets repaid and interest gets transferred to the interest pool, all the depositors are looking at that pool and are going to try to claim that interest. Now, what's interesting, and is a bit of game theory, if you like, that comes into play here is you may have picked to deposit and lend your Fantom at 10%. Let's say it was 1,000 FTM. So you're looking to claim 100 interest. You always need to sit there and ask yourself, am I going to wait till that interest pool has 100 FTM before I claim it so that I get my 10%? Knowing full well that there are other lenders out there who may have chosen 2% or 3% or 5% and would sort of get to their desired interest rate quicker than you might. So, you know, it's up to the individual depositor to sort of sit there and think, and if you've picked 10%, nothing stops you from claiming less than that. The only thing is, once you do, you know, you've lost that claim and you need to redeposit and essentially recreate a lending contract, re-interact with the lending side of the smart contracts of the platform. So that's a little bit of, I guess, just describing why our rates are fixed, and then understanding that there's still that additional step of claiming your interest that needs to transpire. And, you know, we can circle back into why and how that would fit very well into, other parties that would like to build on top of our smart contracts, like what they would need to build to make what they're trying to offer on their end attractive for people looking for returns for their capital.
Sure. So I definitely on that later. I think one thing I'd like to flesh out a little bit more, and we've bounced around it a fair amount already, but let's talk a little bit about the KAE token. So the purpose of the KAE token, from what I understood earlier, is purely to incentivize on this platform. That is the purpose of it. So it doesn't, or does it? I don't know. Have governance properties as well?
Governance, no.
No governance.
No, it is a utility and reward token.
Okay.
So
it's a reward token first and foremost. But we've also spoken about the fact that it can have some utility as well.
Yeah.
So as a reward token, it's predominantly rewarding borrowers, correct?
Yeah. It is only rewarding borrowers.
Okay. So it's a reward token for borrowers, and for borrowers who take on a higher amount of risk, so higher interest rates, etc., for a longer period of time, they earn more KAE than if you take out a lower interest rate loan for a shorter period of time.
That's correct, yeah.
Which is where you might end up with that interesting position you've mentioned, where someone might take out a higher interest rate loan for a longer period of time, and as a result, actually earn back more than they originally had.
Yeah.
Okay, so that's that side of things. But the utility side really comes into play, from my understanding of this, for depositors.
Mm-hmm.
So if you're a depositor, that's when you might stake the KAE token.
Well, the utility is for both depositors and borrowers.
Okay.
So obviously, as I mentioned before, if you don't stake if you're a depositor and you don't stake your tokens, you are eligible for 2 or 3% interest. You stake your tokens, you can get your higher interest rates up to 10%.
Okay.
Okay. There's no APRs, there's no APYs. It's purely fixed interest between 2 and 10%. You also, if you don't stake the token, you are limited to $100,000 per vault. Sorry. Once you stake, you are unlimited. Basically, you can stake, you can deposit as much as you want.
Okay.
You also have access to the one-click redeposit, which is a great feature. So as soon as you claim your interest, so say for example you've deposited 10,000 USDC, you get your 1,000 interest paid. You click one button and it just automatically puts your loan and your interest back in. So it allows you to compound everything you've earned back into the pool, and then instead of your 10,000 or your 11,000, and you just keep going.
Okay.
With the depositor, you also get shorter lockup periods as well. So when you stake K, without staking K, you're at 30 days. If you stake K, you're at 21 days. So it does offer you quite a lot of benefits for staking the token as a depositor. It also gives you higher reward caps, increased rewards as a borrower. You also get lower liquidation ratios as a borrower. So
okay. So the KAE token, and Toby, if you want to chime in as well after this, please do. But the KAE token then is beneficial as a utility token to both borrowers and depositors. And for anyone that's looking to have a superior experience, either as a borrower or a depositor, they would probably want to stake some KAE when they make whatever transaction they're going to make.
Yeah, that's right. That's right. And I did mention at the outset, that we fully not expect, but are well prepared for a scenario where a borrower gets these rewards and simply dumps them on the market. That's fine. 100% of our fees are used to buy back and burn our token, and or used to provide liquidity for the trading of our tokens on decentralized exchanges. So we have measures in place that are meant to sort of absorb. And this is from my perspective, worst case scenario, that somebody just borrows, gets great rewards, and sells them, which it's within their right to do, and that's fine. But what is also important is the fact that we've created these utility points that they're not just a nice to have, they're strapped into how you can best utilize the platform, and having a shorter lockup period is important, right? Like having your cash locked up anywhere for 30 days can be a challenge in crypto. We know that. And being able to interact and reduce that to say 21 days by staking the KE token as a depositor is a big deal. The one-click redeposit allows you to compound interest. That's a big deal. The unlimited deposits it becomes an interesting concept, and I won't stray too much off the beaten path here, but even if you had $10 million, you want to take a second and sit down and think, do I want to deposit all 10 million at once? Do I want to break that down into 50 or 100K chunks? What is that giving me in terms of my ability to claim full sum interest? Say that 10% that you get to pick on a drop-down menu. There's some concepts that you need to think through, and some strategies, if you like, that you'd want to consider as you're looking at some of these features, which is exactly what we were trying to anticipate and achieve when we came up with them. The integral part of our platform being the ability to choose your own interest rates up until 10% as a depositor or lender, a depositor or borrower. That's again something that's deeply connected to having and being able to stake KAE. So, while worst case people might earn these rewards and offload them immediately, it is also quite realistic that people will earn those KAE tokens and turn around and use them. Use them as depositors to unlock some of these features that I just described. The last of which would be a fee reduction of 25%, platform fee reduction of 25% if again you're staking some KAE. So just to round off there, KAE is a reward token. It is a reward token that it has a dynamic supply, and that the sort of the balance of that supply is held together by a back and burn feature, but that's a secondary mechanism for holding that balance. The primary mechanism for holding that balance is staking. And I would say, my math is bad, but approximately just under 18,000 KAE is already being staked on our platform, and for a token that's got 300,000 KAE in circulation, that's a significant amount of KAE tokens being staked within a 4-week period since we launched. So that speaks to, like, the exact opposite is happening to our token compared to many other lending platforms, right? They're just emitting and giving away more tokens, and there's nothing that really causes people to want to hold those tokens long for any period of time. There might be some voting, but in a lot of situations, people are selling those tokens, and whereas the opposite is happening with us. We've been able to get, just was it between 6 to 8% of our token supply being locked up in a 4-week period, and it doesn't look like it's going to slow down. So, we're proud we've been able to, get comfortable with having utility, ensuring we're not a token that's connected to an ICO. So, it to be a security. Those types of things are important.
Can we drill into that a little bit more? So, one of the things that is interesting is, obviously, we mentioned Yield, which is previously the version of Kanpeki that was on Ethereum.
Yes.
And prior to that, in fact, there was Elixir or Elix, which was an initial attempt at creating an incentivized borrowing and lending platform, but I don't think with the fixed rate stuff, if I have my facts correct. And this was way back in 2017.
Yeah.
So the interesting piece, I guess, to ask about is this idea of funding and venture capitalists and all this stuff. So, one of the things that you said repeatedly is it's a community project, but you have just then spoken about the tokens, so KAE, and you're pleased that it's being staked, etc., etc. It's not being sold off in huge amounts.
Yeah.
So how does that work? So what is for you guys who are producing this, what is the incentive model for you to produce this? So you're building this platform, and I know after this, I want to get to how other protocols might use Kanpeki, because I know you've spoken about repeatedly, and that's something you want to see happening, and maybe that's where this moves to next.
Right.
But for Kanpeki right now, and for those members on the team working on this, how does that work? Because there was no. So, what was the original funding behind Kanpeki, if there was? And I suspect the answer is going to be there wasn't. And then from there, how is everything being funded right now? Is this purely altruistic from your points of view, or do you hold some of the tokens? And
it's purely altruistic. We've built something that sort of has put as much as possible all of the influences that generally causes projects to go left field or right field, however you want to look at it. Yeah, we've put those stuff in the background, and I didn't say bad on purpose, because they're very successful crypto DeFi projects out there that are still not run very well. And just because you've got great intent and and your ducks are lined up straight and everything makes sense, doesn't mean your idea is going to catch on. And just because you're a fork doesn't mean you're destined to fail. I mean, if it's all anything, it probably makes it easier for you to move, move forward quicker, because you have to do less explaining as to what you are, what you stand for, and how people should use your platform. So it's not as black and white as to just say, oh, it's bad actors. But I do think it is noise. I think me sitting on $15 million of people's money that was raised as an ICO makes it so that I have to listen to a lot of noise in and around doing what's best for a set of contracts that was put together and is accessible by anyone on chain, right? It's not owned by me, but it also isn't owned by anyone, because I wasn't giving money to help build it. So you could say it's altruistic, you could say it's a labor of love. But what we're trying to do is, just for once in crypto, build something that works because it works, not because it's profitable necessarily for any one individual, but because it should be profitable for anyone that utilizes it, which means I should be using it, just like I'm not trying to get everyone else to use that platform. It's a state of play that I've come to respect. It's one that it's one our lead developer, Coiner, holds near and dear to him, and I've adopted it because I think it's how you lead by example, and whether or not Kanpeki is successful, I think it was the right move to just build something that works and that is way more profitable for anyone using it compared to any other lending platform out there, right? You're not getting 10%. You're not getting 10% return on 1,000 FTM in 30 days on any other platform, on any other blockchain, right? Lending platform on any other blockchain. So something that works, something that makes people money, and something that allows us to be able to just ignore the noise that every builder and team member of basically every project has to deal with. And then secondary to that, there are also legal reasons as to why we didn't go down the ICO route. Last thing I want is for as Coiner likes to call them, a 3-letter agency calling me up saying you've launched this token and collected money from these 800 people and you needed to have filed here, here, and here, which you didn't. So we didn't want that. It's also the reason why we're apprehensive in and around DAO tokens. We don't think they meet all the requirements, in this case specifically of the SEC in the United States and similar type organizations in other countries. So what we've done here is built the foundation in as neutral a way as possible, right? It's very much in the spirit of our time, right? As far as Bitcoin is concerned, it's not, doesn't belong to any one person. It's on chain. Anyone can access it. No one controls it. And there is no delta, right? There is no delta between what the borrower pays and what the depositor gets to deduct or gets to claim. The platform doesn't profit anywhere, and the fees generated are all spent for the platform. And I think the return for us that are, those of us that have been connected to this from the outset is we're going to build more things, and we're going to utilize a similar concepts for building those things. And I think people are going to start to see us for that. And I think everything that comes along with, with that, call it respect, but also with reputation and understanding that we're not just out here claiming things should work this way because we say so. No, it's supported by an MVP that we put out and we realized this and that didn't work. It's supported by what 90% of the market's doing. It's supported by the fact that we have cascading liquidations that send projects into 99%, token declining value. There's hacks everywhere because most of the code looks like each other and they're all forked. There's all these underlying pain points that people don't want to spend time looking at because they'd rather make money and yeah, I would rather make money too. I've thankfully done well for myself outside crypto, but I think it's important for people to champion these pain points and and Kanpeki and those of us behind Kanpeki are looking to do so.
Okay, so there's a sense of a desire for credibility being important to you, and then potentially how that credibility might then buttress or reinforce future projects as a result of it being built up in this domain first, potentially.
You got it.
Okay. And then, look, I mean, we're coming up on an hour, but I think, a couple of bits that would be good to round out with would be, first of all, if you could just speak to why Fantom. So I know that you were on Ethereum previously, and if I were to wager a guess, as we've already mentioned this earlier, congestion on Ethereum may have been a fairly pivotal reason to make your way over to us here in Fantom Land. Do you want to just go ahead and expand on that a little bit?
Yeah, Fantom is a bit of a no-brainer. Yes, the gas fees are important. Yes, the Fantom ecosystem is inviting. Yes, you've got a very active foundation that's, almost kind of like you're washing ashore and they're picking you up and they're throwing towels around you and they're like, "Oh, welcome. You have some have some coffee, you have some warm tea." The foundation does a great job of giving attention to new projects and sort of chaperoning them. You've got FTM alerts that, kind of rolls out the red carpet a little bit, regardless of who you are, whether you're, Bancor or you're just, little old, small project that launched with their own funds. Like you're getting that welcome. And I think that's important. Yep. But beyond those things and drilling down to just facts, when you look at usage, when you look at wallets numbers, when you look at transaction volume, right? When you look at which platform is poised to grow exponentially, and I don't mean necessarily price, but I just mean in usage, like this is it, right? This like Fantom hasn't arrived. It's not plateaued, not anywhere close, right? I think we can all agree on that. So really, you're kind of hitching yourself onto a train that's about to, go bye-bye. So from our perspective, that made a lot of sense. DeFi was already, when we made the decision to come to Fantom, DeFi was already heavily leaning and become, Fantom was being a hotbed for various DeFi projects, not just lending platforms, but a whole range of them.
Yeah.
So it was a no-brainer. Like all those things that, inviting the gas fees, the foundation, FTM alerts, folks like yourself helping us out, like all these things are important. But again, just from a perspective of growth, I don't think a lot of these other platforms, have the numbers to support what we're talking about here at Fantom.
Okay.
Yeah, Fantom seems to check all the boxes for Kanpeki.
Okay. And then Kanpeki itself, this is just a nice place to finish, but Kanpeki itself is it Japanese originally, and it means something like completeness?
There's a couple of translations: perfection, balance. So.
Okay.
And yes, it is Japanese. And yes, it is Japanese.
Mm-hmm. Yeah.
But so there was what was the rationale? Just an easier way to finish. What was the rationale behind the name?
So
I don't know, Bobby. Do you remember?
Can I say it?
Maybe
Yeah,
that's
go.
maybe that's not,
Okay. So
maybe that's not the easy question. I thought it was.
no, it's just I'll be honest, right? It was an inside joke. It was so our lead developer, he has a habit of using Japanese words when he talks about things with us, and for ages we have been using Google Translate to understand what he's saying, and he used to always use Kanpeki, perfect, sorry, not always. It was very rare when he said Kanpeki. When he said Kanpeki, it was like, yes, we've hit it. It was an inside joke, It's and
It means you've done a great job.
and it was very rare to hear it from Coiner. It was, and when you did, it was like a boost to everyone involved. So when we were talking about the whole, the rebrand, because with Yield, that was another thing. Everyone started using Yield, the name Yield. It caused so much confusion, and we took on the communities. They all discussed it. They all told us what they think we should do, and we took it all on board and we listened. So we discussed we should do a rebrand, discussed everything, all what we should call the token, what should we do, and the hardest part of it was what should we call it. So we went through a few different names, had a few discussions, a few jokes, and then one of the boys decided to Kanpeki, you like to use that whenever everyone does anything good, and it means perfect, great, balanced, and it was just one of those things. We all laughed about it, and it just seemed to hit home. It was the perfect name. So obviously anyone who hears the name won't understand it immediately, but once they do, they'll get it. It was for what we've tried to create here in regards to a lending platform that is as well balanced for not just the lender but the borrower as well. It seemed to be the perfect fitting name, So
it seemed to be Kanpeki.
Exactly, So anytime you see, the official Twitter post say "Stay Kanpeki," that's stay perfect, stay balanced.
I could absolutely see my future conversations saying
that. I'm going to get t-shirts made, hashtag Stay Kanpeki.
Well, look, guys, it's been really great talking to you. We're coming to the hour mark now, so I'm probably going to wrap here. Are there any other things to add in before we finish?
No, listen, it's been great talking to you, Chadley, and if it's okay, I'd like to give a shout out to all the Fantom community. You have been great and welcoming. I'd also like to give a shout out to our own community, the Kanpeki team, the Kanpeki Ninjas. You have done a brilliant job. You keep at it. Don't stop. We're all going to make it.
Sure.
Yeah, Charlie, thank you for giving us the platform to have this conversation. I had sent you a quick note a few days ago saying, that your position within the Fantom ecosystem seems to be doing very well. Your clout levels seem to be increasing, which is great, and I think that speaks to the amount of time you put into getting these interviews together, structuring them, getting aligned on the questions, and keeping the conversation going about what is good and what is healthy for Fantom. So yeah, thank you for setting this up for us and letting us catch everyone up on what Kanpeki is. And yeah, we'll keep in touch, and I'm sure we'll connect one of these days.
Sure. Yeah. No, I appreciate that. I appreciate that a lot. Like for you guys, it's definitely a labor of love. Okay.
Absolutely.
We'll wrap things up there, guys. Thanks for tuning in. It's one of the weird realities at the moment with Twitter's